November 2018, what transpired was we hit really a high point in the mortgage rate industry in general. What that did is it obviously caused a reaction within the markets. Even nationwide, we saw a slowing and just a pause within the markets. But here's the good news. In December, what happened is that the Federal Reserve, they said we have raised the prime rate enough, and so we are going to pause on doing that for a while. The market has reacted very positively to that, and slowly but surely rates started coming back down. And now we're sending out quotes that are in the mid fours to low fours, just depending on the situation.
4.5% to 5% interest rate historically is awesome.
It's unbelievable. Yes. I mean, if you could give me these types of rates for the rest of my career, I'll take it all day long.
I am here today with a good friend and longtime business partner.
That's right.
Mr. Chad Krober with Academy Mortgage. I posted a market update last week. A lot has been changing in the mortgage market, so I think now is a really good time to have a quick conversation with Chad and see what is really going on. Affordability is still an issue. I mean, it is real life. So talk to me for a second about how are you combating that, and maybe give me one good option that you're seeing help people get in affordably and have the payment that they really are looking for.
Yeah. No, you're correct. Affordability is a challenge right now in any metropolitan area.
Across the nation.
Across the nation. Home prices are at a 8, 9, 10-year high from where we were in 07, 08.
Although appreciation has slowed down over I think it's been the past 12 months. This is the slowest appreciation that we've seen in the past about 10 years.
I would agree, 100%. So because of this affordability factor of homes being at that higher level, of course, it makes everybody say, well, okay, can I afford this home? What's the payment look like?
Right.
One of the great ways that we've been able to help overcome maybe a pause or a hesitation is that Fannie Mae, they have a great loan product called Home Ready. And Home Ready allows a buyer to get into a home with just 3% down. That's it, 3%.
3%.
Okay? Where there was a roadblock in the past was that Fannie Mae limited places where we could use that product because they had what we called a median income cap on certain areas. And thankfully, they looked across the country and they said, you know what, we're going to remove that cap from a lot of the areas where we had it. And so it has now given folks the opportunity to be able to come in and buy a home in an area with only needing to put 3% down, and they're not held back by that 3% income cap anymore. The other great thing about Home Ready is that with only 3% down, you can also get cheaper mortgage insurance as opposed to like a 5% or maybe even a 10% down conventional loan product. So you get a double win. You get only 3% down with more money in your pocket for a lower down payment, and you get better mortgage insurance with that product as well. There are some other qualification factors that you have to meet, but you can give us a call and we can walk you through and figure out if it's a good fit for you.
Okay, awesome. So what I'm going to do is down below in the notes, I'll put a link to your website and also your contact information so they actually know how to get a hold of you. And what I can say is I have been working with this guy for the past 9 years, he and his team, and there's nobody better in the business. There's nobody that I trust more. I've done all of my personal loans with him for years and years and years, and they just do an awesome job. Work super hard. Their communication is absolutely exceptional. So I'm just going to stop right there. So,
thank you.
So down below, you're going to be able to see that. With that being said, I think one of the big misconceptions that I see and I hear on a regular basis is how much it actually takes for a down payment. There, in people's minds, it's crazy that it's 2019 right now, and people still think that you need 20% down on a mortgage. And like, as long as I've been in real estate, you haven't needed 20% down. So I think it might be something that was happening back in like the 50s or the 60s or the 70s. I don't know, a really long time ago, and it got stuck in people's minds.
Yeah.
The reality is there are 100% programs. There are also grant programs that we're not going to go into great detail, but allow a home buyer to get in with basically a
Zero
grant.
down.
Yeah, zero down.
Zero down. So, I mean, from the dynamic of 20% down, is it great? It's great. But
It's ideal. If you have the money to put down, then do it.
But if you can get into a home with less down and we can get you a payment that fits for what you're needing or what you think you can afford, we have 10 loan programs, 10, that are anywhere from 0 up to 3.5% down. Every single one of them allows a gift from a family member.
Awesome.
That
can help.
Yeah, every single one of them are usable here in Oregon. They all do have specific components that you have to qualify for. You have to meet the guidelines, as you can imagine, because we're borrowing a lot of money here. This isn't just a credit card or an auto loan.
Right.
You're buying a house. But 0 to 3.5%, 10 loan products, gifts. I mean, it's an incredible opportunity. And with rates being where they are now in the mid and lower fours, instead of paying rent all the time and putting it in
Paying somebody else's mortgage.
pocket.
That's all
or
you're
paying
doing. You're
someone
paying
else's
somebody else's mortgage.
You can be investing in yourself, without a doubt. So,
Okay. Awesome. The spring market, I believe, we're going to definitely see an uptick in the spring market because of rates.
Yeah.
Rates have gone down to the best that they've been in about the past 12 months or so. The phone is ringing more.
Yep.
People have more inquiries. They're starting to get more active.
Yep.
And people that maybe were on the fence and they're like, I just don't want to do anything. They're hopping off the fence and they're starting to take action.
I would agree.
We're also going to see inventory increase over the next 4 months to probably its peak in about 4 months down the road. So there are going to be a lot more options for home buyers between interest rates and the options that you're going to have. Now's an awesome time. So
Love it.
yeah.
Let's get you prepared, folks. Give us a call.
Awesome. So thank you so much for tuning in. I'd love to hear your comments down below. If you have any feedback, any questions, leave them in the comments down below. Otherwise, what was your first interest rate? My first interest rate on my first home was 7.25%. It was in 1999, I believe.
Yeah.
7.25%. What was yours?
Yeah. 8.75.
Oh, he totally warped me. That sucks.
8.75.
Okay, so what was your first interest rate? I'd love to hear. Thanks for tuning in.
See ya.
We'll come at you next time.
Bye-bye.
Bye, friends. What else is there? We're gonna have to cut this part because
Yeah, it's no worries.
Okay, what were we talking about? Okay, right. I thought of something and then I lost it. Ready? Go.
All right.
Okay, so let's program,
Okay.
gift program, grant program,
Grant
whatever.
program. All right.
Okay, so
Yeah,
you're gonna have to
gift
cut. You're
grant.
gonna have to cut that part out.
Grant.